Welcome. In this video, will Zbcn coin pump continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking at the chart, there is a remarkable resistance zone just above the current position of the price. This level has served as an area where investors have sold heavily, stopping the price from rising many times in the past. Such levels are referred to as strong resistances in technical analysis, and whether or not the price can break through that area often gives important clues about the direction of the market. However, the current technical outlook shows a number of positive signals that suggest that the potential for this resistance to be breached is quite high. First of all, the structure of the price as it approaches this resistance is quite positive. The increase in volume during the rallies indicates that the buying appetite has strengthened, and investors' belief that the price will break through this resistance has increased. Attacks on resistance levels, especially with high volume, allow these levels to be broken more easily. Because in these areas that have worked as resistance in the past, the selling pressure is now reduced, and the price starts a new upward movement as buyers become dominant. The fact that the price has tested this level many times before also indicates that this is an important liquidity pool. Such areas are usually where large traders adjust their positions, stop orders accumulate, and the price can quickly move to new levels after the breakout. In technical analysis, this is described as a momentum surge after a break of resistance. This means that if the price manages to break this level, it can move rapidly upwards, supported not only by the existing buying pressure, but also by buy orders accumulating just above the resistance. With an upside breakout of this resistance level, the price may be willing to break through the previous high and make a new high. This is because in technical analysis, when the price breaks through the previous high, this is usually interpreted as the start of a new uptrend. Such situations usually have a positive effect on the psychology of the market. Investors start to participate more in the market, thinking that if the price has made a new high, then higher is possible. This ensures a steady rise in the price. In addition, a break of this resistance will also contribute to the technical structure turning positive on larger time frames. For example, when a significant resistance is broken on the daily or weekly chart, this often leads to long-term traders starting to take positions. Large players, especially those who trade on a pattern basis, follow such breakouts and adjust their positions accordingly. This supports the uptrend not only in the short term, but also in the medium and long term. It also makes sense that the price is forming rising bottoms as it approaches this resistance. This structure indicates that the market is finding buyers at increasingly higher levels and sellers are giving up earlier. This increases the likelihood of the price breaking the resistance level to the upside. In technical analysis, the rising bottom plus horizontal resistance pattern is called an ascending triangle pattern, and this structure is usually broken to the upside. The current outlook also supports this pattern. Breaking this resistance level will be of great importance not only from a technical point of view, but also from a psychological point of view. This is because a significant portion of the investors considered this area as a difficult threshold to break. However, once the breakout occurs, this perception will change, and the idea that the price can now reach higher levels will spread in the market. Such psychological breakouts also often lead to a change in market structure and the start of stronger trends. But we can't decide the analysis only by resistance. Let's look at other metrics. Stay tuned. Looking carefully at the chart, we can see that there is a distinct descending channel structure in which the price is moving. This type of channel structure is common in technical analysis and provides valuable information. Descending channels usually indicate that the price is moving steadily in a downtrend, but at the same time, breakouts of such patterns can often herald sharp moves to the upside. In particular, this type of channel pattern is known for signaling a bearish correction in the price, while signaling that the overall trend could turn bullish. Looking at the current price action, we can see that the middle band of this descending channel has been breached, which is a very positive technical development. The middle band of the channel is usually an important area that can act as both support and resistance. When the price moves below this band within the channel, it usually tends to move towards the lower band. However, when the price moves above the middle band, it signals that the upside momentum has strengthened, and the upper band of the channel has now become the target. In this context, a strong break above the mid-band is an important signal that the current downtrend is gradually weakening and the bulls are starting to dominate the market again. This is because this type of crossover may indicate that the price is now preparing to break out of the channel boundaries and set a new direction. Especially if the price holds at this level, this middle band will now act as support and the price will continue its upward movement more strongly. If the price targets the upper band of the descending channel, it is a sign that the market dynamics are changing in a positive direction, and technical indicators support this. This is because in technical analysis, it is a classic in-channel movement scenario for the price to test the lower band, cross the middle band, and then head towards the upper band. This structure also reassures traders because the price action follows a certain systematic pattern. This systematic structure contributes to more traders taking positions and the price maintaining its upward momentum. However, when the price stays above the middle band of the channel, it is a strong signal not only technically but also psychologically. In such cases, traders think that a strong resistance has been broken and positive expectations increase. Especially if the price has previously failed to break through this mid-band and bounced back, breaking through this level can also create a turning point in investor psychology. This may increase buying pressure and allow the price to reach the upper band more quickly. In this process, it is also important to pay attention to volume analysis. If there is a noticeable increase in trading volume as the price breaks through the mid-band, it gives important clues as to how strong and permanent this breakout may be. Breakouts that occur on high volume are usually based on more solid fundamentals, and the subsequent uptrends are stronger. If the price is supported by increased volume as it breaks through this level, this further increases the sustainability of the upward movement. With the price heading towards the upper band, target levels can now be more clearly defined. The upper band of the channel is the peak of the price within this structure and is often considered a take-profit zone in technical analysis. However, if the price manages to not only test it but also break it to the upside, it means that the downtrend is completely over and a new uptrend has begun. For long-term traders, this means that there are opportunities to increase or open new positions. A careful look at the chart clearly shows that the price has moved back above the 200 EMA. This technical development is a very critical and positive signal for investors and traders. This is because the 200 EMA is one of the most powerful moving averages used to determine the long-term direction of the market and often provides insight into the direction of the trend. If the price is below this average, it indicates that the market is generally bearish, while if it is above it, it indicates that a long-term uptrend is in progress. Therefore, in the current situation, the fact that the price has moved above the 200 EMA is an extremely important technical indicator that can be read in favor of a bull market. In particular, the fact that this movement has taken place with a certain strength and determination can be considered as a clear indication that market participants have started to take a bullish position again. This is because the 200 EMA usually works as a very strong resistance or support zone. The price may have approached this level before but failed to break above it. Now, however, the fact that this level has been breached shows that confidence has been restored in the market. Buyers have stepped in and bearish pressure has subsided. It's not just the lines or levels behind such technical structures. Investor psychology and market perception also play a big role. Price action above the 200 EMA gives traders confidence. Thoughts such as "the decline is over" or "a new bullish wave is starting" become part of investors' subconscious minds, which increases buying positions. 200 EMA is important for us to see the trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.